Hey everyone, welcome to the KE Report and another company update, this time from Headwater Gold, chatting with the president and CEO, Caleb Stroup. Headwater is traded on the CSE under the symbol HWG and the OTCQB under the symbol HWAUF. We're talking about a news release that came out just yesterday, July 22nd, an LOI, letter of intent with OceanaGold to explore three of the company's projects in Nevada. Total option here to earn 75% in, again, these three different projects, and potentially total of $65 million US being spent, and the completion of pre-feasibility studies. These three projects are TJ, Jake Creek, and Hot Creek. Again, all in Nevada. Now, this is on top of the other exploration partnership that the company has with Newmont. So, Caleb, let's just take us through how this deal came together. Give us a little bit of background on your relationship with OceanaGold and their interest in these three assets, please.
Yeah, so as you alluded to, this is very much in keeping with our overall business model of, being a hybrid junior explorer where we have a large portfolio of properties, some of which we look to fund exploration through partnerships with companies like Newmont and Oceana, some of which we advance on a 100% basis. And over the last, I'd say 6 to 9 months, there's generally been a bit more interest, especially in gold in Nevada, out of the bigger companies, and we've sort of leaned into that and cast a net for what we thought would be good partners on and match them with projects that we thought fit their overall objectives. And this is one of the outcomes of that exercise, and I think it's just an excellent example of how our business model can deliver value for our shareholders and advance exploration, and giving a company like OceanaGold a big footprint of exploration in a place like Nevada. So it's, came out of the sort of thing that we're always doing, building relationships with different companies and trying to understand what it is that they're looking for and deliver properties to them that meet their objectives.
Yeah, Caleb, congrats on the deal or on the letter of intent because it seems like a good marriage of skill sets. They want exposure to gold in Nevada. You've got projects that it's nice to spend other people's money on and have that kind of partnership. But your team has done considerable work already on some of these targets. So maybe give us the backstory and some of the work the team has already completed to build up the targets at TJ and Jake Creek. I think Hot Creek's a little earlier stage, but tell us about the work you've already done to get them interested.
Yeah, so the three properties sort of range from, purely drill-ready drill plays that we've done a lot of background work on to fairly early stage opportunities that we've identified a concept on that needs additional surface work to, delineate the final targets. So in the latter, Hot Creek is one that we just added to the portfolio through claim staking last year, and we've got a good idea of what we think the geology out there means, but needs a fair bit of, basic geologic mapping, soil geochemistry, and geophysics to really test that concept and, see what sort of drill targets emerge and how they stack up against the rest of the Oceana partnered portfolio here. And TJ is on the other end of the spectrum, where it's a project we've been working on for a few years on a 100% basis, including a scout drilling program last year. That was a fairly small RC drilling program that was meant to be a bit of a proof of concept. And we drilled a few holes into, a fully preserved epithermal alteration cell that had significant amounts of anomalous gold, no real high grade, greater than 10 gram per ton sort of numbers yet. But the alteration footprint, the intensity of the alteration and silicification really suggests it's part of a big system. And now we need to go in and drill that at depth with a partnership with Oceana. So that's just a perfect example of what we look to do with our portfolio, across both early stage and more advanced properties.
Now, the timeline on all of this to earn up to 65% is within an 8-year period. There is some time here for Oceana, as you even kind of outlined, get an understanding of what's possible and then maybe start drilling these projects. Since this is an LOI, give us a bit of a lay of the land in terms of time frame. When could this deal be finalized? When could we start to see work being done at any of these assets?
Yeah, so as you said, this is an LOI, and we're looking to get the definitive agreement sorted in short order here so that we can get drilling first on our TJ project this fall. Plans are in motion right now to get that all teed up immediately upon closing of the definitive agreement. So I expect this to contribute to another busy year of drilling for Headwater. And it's probably worth, I guess, maybe going through the broader deal and outlining exactly what this means and what the timelines look like on the slightly longer term. So all three projects, the structure is very similar. And maybe I'll just take one TJ as an example. So there's a $10 million US spend in a stage one that will give them an option to get to 51% within the first 4 years. 1 million of that 10 is guaranteed. So they either have to spend that in the first 2 years or pay us the difference in cash. If they do get that 51% through the completion of stage one, they'll then have an option to spend an additional 15 million US to get up to 65%. But then comes in my mind, what the big one, stage three, is to get from 65 to 75, they need to deliver a pre-feasibility study. So, that gives us a 25% free carried project interest all the way to PFS. Plus, at that point, there's a 1% royalty that kicks in on top of our 25%. So I think this is an excellent mechanism, for non-dilutive way to advance these projects and still retain a significant piece of the pie here.
Yeah, fingers crossed you get to phase three on all of those projects, Caleb. But it's thank you for lining out the roadmap of how those different phases come in, phase one, two, and three. I think it's also worth noting that you remain the operator of these projects and you get a management fee. So talk about how that fits into your business model and allows you to cover the day-to-day expenses for the company.
Yeah, so I mean, again, that's squarely right down the middle of our business model, and operating these projects on behalf of our partners, gives us a number of different things. As you said, it helps to finance the day-to-day of the company and retain a solid technical staff on a longer term basis than would be possible for most small junior companies. But it also gives us, more direct technical input and control over what exactly is happening on the ground. And so I would like to think that, part of the value that we add to our partnerships is our local knowledge in a place like Nevada and our ability to execute on the ground. And so I think really it's a win-win for both parties in a situation like this.
Caleb, look, you already have a pretty big deal with Newmont that's ongoing. Now you have this new deal, if it gets signed, with Oceana. Do you have the staff to maintain all these drill programs and keep all these majors happy?
Yeah, I mean, so you can look at our history over the last few years. We've, drilled 3 to 5 projects per year on a routine basis. So, operating 2, 3, 4, 5 drill projects a year is something that, we're built for. And we're very used to this sort of thing. And, will be really, sort of the continuation of, in a lot of cases, what we're doing already, just funded through a different mechanism.
Well, to that point, anything you want to say about some of the other projects that you're moving forward with Newmont and any of the work programs ongoing with those projects?
Yeah, so we have 2 projects still in partnership with Newmont in the Walker Lane in Nevada, Spring Peak and Lodestar. And Lodestar in particular is one that we're really excited about. It is a fresh undrilled target on the north end of the Aurora district, where Spring Peak is sort of on the south end. This year, our focus has been more on Lodestar, and we're advancing that through permitting, looking forward to a drill program out there later this year. So if that comes through and TJ, that'll be 2 partner-funded drill programs at a minimum there, with potential for more as we get everything sorted out in this Oceana definitive agreement and final plans for the full program under that partnership. So definitely looking forward to a busy year for the remainder of the year. And we also always have the potential to drill one or more self-funded projects too, where we do have some cash in the bank. There's still a few, things in play with the finalizing of these various programs and determining where and when we would want to do our own self-funded drilling. But that again, it's a bit of upside to the story as as everything emerges, you'll be able to see potential for more projects being advanced this year as well.
Caleb, do you see that happening? Do you see you as a company drilling one of your own 100% owned projects? I ask this because, look, one of the knocks or comments we get about Headwater is that there just isn't that much news that comes out. You have a news release when you can release it in terms of these property drill or in terms of these partnership drill programs, but quite frankly, news comes out maybe every month, maybe every 2 months. So could you amp that up? Would you drill your own projects?
So, I mean, our schedule of drilling our own projects and just the overall level of activity on the self-funded side over the last couple of years, and really by design with our business model, is a function of market conditions and the availability of capital. So, when we're in a situation where we have a lot of activity on the partner funded side and the market is not particularly interested in exploration stories, and as a function of that, capital is a little bit more scarce, we might lean more into the partnered projects. If things come around and there's financing windows that are opening up, allowing for us to raise capital to deploy on our own projects, we're wide open to that. We're explorers by heart. There's a reason we're not a pure project generator. It's because we like drilling our own projects. But I'm very sensitive to, our capital structure, and I don't want to unnecessarily dilute the company at a time that doesn't make sense when we already have a lot of shots on goal happening. So I guess you'll just have to watch the story develop and see what direction we decide to take things there.
Well, and Caleb, as you get more partner-funded capital coming into the company, it just gives you more optionality for which ones you could drill on a 100% basis. One other thing we hear, and I think it'd be great to address, is with the prospect generator, or at least with the partner-funded part of it, because you have a hybrid model, even if, discovery's made, they only own a percentage of it, maybe just speak to the nature of all of these targets, that these are big tier one swing for the fences type of plays. So if something is made a major discovery, these still move the needle for you, even if you become a minority shareholder in these, correct?
Yeah, I mean, so the carried 25% interest plus a retained royalty on the partner-funded projects, and that's across the board between the Oceana projects and the Newmont projects. That leaves a significant amount of upside on a per share basis because you don't have to suffer the dilution along the way that you otherwise would if you're advancing it yourself. So first of all, your piece of the pie is still pretty big. You're not suffering any dilution. And then when you look at the sort of targets we're chasing, the Walker Lane, has delivered massive epithermal discoveries in, the last decade. Look at Silicon and Merlin. And, you can look at the deal that, Origin was able to do off the basis of just a simple NSR on that. Imagine if you had a carried 25% interest on top of that NSR. So I think there's still a massive amount of upside, and pair that with the protection against dilution along the way. We're looking to create value on a per share basis, not necessarily just build the market cap bigger. We want the share price to go up.
So Caleb, just wrap us up then. Near-term news flow. What should shareholders be watching out for?
Yeah, so I mean, we're in a period right now where there's a lot of things falling into place with the timeline of all these drilling projects that we discussed, the finalizing of the definitive agreement with Oceana, and our plans for the remainder of the portfolio emerging, which includes potential work on our own or potential additional partnerships. We're still talking to people on different projects where we're the right partner and the right project could align. So there could be more of that. And, I think the market that we're, doing all this into is developing quite well. Gold is looking great, and there's more and more interest in the gold juniors. So I think we're looking forward to a really great second half of the year.
All right, Caleb, thank you for the update. And hey, I look forward to hearing what comes out of this OceanaGold deal when it gets signed and when that work starts. Again, Caleb Stroup, President and CEO of Headwater Gold. Click that link in the show link. Click the link in the show notes if you want more information on the company, and send us any questions you might have for Caleb. Caleb, thank you very much for your time today.
All right. Thanks a lot, guys.